Are you guys wondering what's going to happen with all these tariffs? How it's going to impact inflation, the cost of goods and services, what's going to happen to our economy here in the United States and even the international economy? Well, you're in good company because we received some awesome questions this week in the info at CFG Financial Planning inbox. Some clients really fired off some good ones here, most specifically having to deal with tariffs on aluminum, steel, and other consumable products, used to build stuff we use every day, like gutters on houses, flashing, cars is a great example. Of cost of these things on the surface would seem like they're going to go up. That would be a logical response. But counter to some of the tariffs being inflationary, there's also deflationary policy that's been floated and built in. That would come in the form of reduction in government spending, which is already happening. Hiring freeze, layoffs, et cetera, would increase the unemployment rate, of course, but also put downward pressure on wages, which is deflationary in nature. So there's really no historic precedent to fall back on with all of this, with two conflicting policies going back and forth at the same time. What we have is a Fed that's in a pause, wait, and see kind of mode to try to react appropriately, as they are, at least on the surface, more concerned with the inflationary piece than they are about unemployment, with keeping rates where they are right now. Ultimately, I don't have a perfect answer. Nobody does. If somebody tells you they know exactly what's going to happen, they're lying to you. But what I can say is volatility is highly likely in the market, and there should be some swings. Now, keep in mind, historically speaking, you have at least two 5% drops in indices on average in any given year, and about one 10% drop. So that would not be unprecedented by any stretch of the imagination. We've had a very, very strong market over the last couple of years with the wildly inflationary policies of the previous administration. We are seeing a slight tightening from the current administration kind of across the board. Ultimate goal here would be to reset some asset prices and improve relative affordability, especially on the housing front. I don't know if it's going to work as planned or not, but what I can say is it should theoretically improve the government balance sheet. Hopefully that answers the question, but in terms of strategy going forward for us here, this is probably not the forum to get too granular, but conservatizing to some degree is logical. The opportunity to invest in fixed income, especially high quality fixed income, is attractive at the moment, especially if you look at the buy low, sell high strategy historically that everybody loves to talk about. Bonds went down, 15 to 20% from their peaks and have not recovered much, which makes them relatively more attractive from a risk reward profile. Remember, hope's not an investment strategy. Hope you like this Ask Alex Anything segment. Please send in more questions. Next week, we're going to get into 529 and college planning questions that we have on deck. Y'all take care. Have a wonderful weekend.